Thank you. Okay, hi everyone. Thank you for sticking around for the launch of the Mid-Year World Economic Situation and Prospects report. I'm Martina Donlan with the Global Communications Department here at the UN, and we have two distinguished speakers from the Department of Economic and Social Affairs, Mr. Shantanu Mukherjee, the Director of the Economic Analysis and Policy Division, and Ingo Pitterle, Senior Economist at the Global Economic Monitoring Branch. So I'll hand right over to Mr. Mukherjee to give us an overview, and then Mr. Pitterle will have some more specific data to show on some slides. So please.
Thank you, Martina. I'd like to present a few headline facts from our mid-year update to the World Economic Situation and Prospects report that had come out in January. And I'd like to speak about three big picture issues: the global situation, tariffs and economic uncertainty, state of public finance across the world, and then take just a moment to look ahead a little bit, to the extent that's possible these days. There's so much uncertainty in the air. But first, on the global picture, it's been a nervous time for the global economy. In January this year, we were expecting 2 years of stable, if subpar growth. And since then, prospects have diminished, accompanied by significant volatility across various dimensions. So now we are forecasting global economic growth at 2.4% for 2025 and 2.5% for 2026. This is a downward revision of 0.4 percentage points each year, back from what we were expecting in January. Now, this is not a recession, but the slowing down is affecting most countries and regions. Among the most severely hit are the least developed countries, whose growth prospects for 2025 have fallen from 4.6 to 4.1, which is a drop by a full half percentage point in just a few months. Now, that translates into a loss of billions in economic output for the most disadvantaged of countries. LDCs are home to over half the global population living in extreme poverty, and the only country grouping to actually have a growth target of their own in the 2030 agenda, and they have been battling exceptionally adverse circumstances for a while. With this most recent shock, their 5-year cumulative growth since 2021 is expected to be over 1/4 smaller than it would have been had they just grown at the rate they were averaging before the pandemic. Now, these growth prospects are compounding the challenges they already face, such as falling ODA, limited fiscal space, and high levels of debt. And many developing countries are also still grappling with high levels of inflation, even though this is gradually moderating in some countries. The second point I'd like to make is about extreme economic uncertainty. I'm not going to talk too much about what we've all seen play out in real time, about the rapid developments with US tariffs since February this year. At this point, the average effective tariff rates for the US are around 14%, which is about 6 times higher than they were at the start of the year. And trade policy uncertainty is a factor in itself. It remains elevated, having surged to its highest value in the last 10 years, multiple times higher than the previous peak. With merchandise trade representing just over 1/5 of world output, and US and China together accounting for about 1/4 of total imports, it's no surprise that these changes reverberate across the world. And going beyond just tariffs, volatility and some rather unexpected co-movements have happened in a range of economic and financial indicators. Indicators may seem a little bit abstract, but there are consequences for real people and businesses. Tariffs put upward pressure on prices, and the broad-based uncertainty slows down both lending and spending. The uncertainty makes it even more likely that investment growth across the world, which was already slowing from 3.5% in 23 to 2.8% in 24, will continue to fall. And just to relate it to something we're all familiar with, for small and medium enterprises, for example, difficulty in accessing capital when most needed can be fatal, with long-term impacts for those whose livelihoods depend on them. Often, these are women. Third, a quick look at the state of public finance, which is evolving somewhat rapidly. across the world, fiscal deficits are now increasing for a variety of reasons. Developed countries and other major economies can finance these deficits quite affordably, but for many developing countries, the fiscal situation is becoming increasingly challenging. In 2025, we expect that developing countries' median interest payments as a share of public revenue will continue to rise, reaching 4 percentage points higher than in the 5 years before the pandemic. Debt challenges could readily worsen in a year when developing countries face a double whammy of slower growth and diminished rate. Finally, looking ahead, despite all of this downgrades, are there reasons for some positivity? The answer is yes, actually, although, there is uncertainty and opinions differ. So the first point I'd like to place here is that our forecast from the beginning of the year indicated that overall the global economy was reasonably healthy. And we recognize also that when assessed in comparison to other recent shocks, such as the global financial crisis, we have a downgrade, but it's not as extreme. In the forecast that we will present in greater detail today, we are expecting that bilateral negotiations will lead to lower tariff levels, although these will not return to pre-February levels. However, despite this, an early and complete resolution of uncertainties would help individuals and businesses move forward with economic decision-making, with positive results in 25 and even bigger impacts in 2026. As things settle, value chains may move and regional trade networks could become deeper, creating opportunities for countries that can invest appropriately. And overall, there is now an increased impetus for countries to build economies that are diversified along many different dimensions. So such an outcome over the medium to longer term will strengthen resilience for everybody and also open up new possibilities. I will now hand over to Ingo from my team to present a more detailed look at our report. Thank you for your attention.
Thank you, Shantanu, and good afternoon, ladies and gentlemen. Let me share some additional insights into how we see the global economic outlook shaping up. But first, I want to emphasize that our forecasts come with a significant degree of uncertainty given the rapidly shifting global policy landscape, which poses major challenges for economic projections. Our overall message is sobering. Economic growth is slowing, uncertainty is high, and risks to development are mounting. The higher US tariffs and the policy unpredictability are weighing on the global economy. And this is compounding structural challenges, which we had highlighted previously, like high debt levels, weak investment, and subdued productivity growth. The lack of clarity around trade policies and their impacts is making it harder for firms worldwide to plan and invest confidently, while also complicating monetary policy making. In our baseline scenario, we therefore project global growth slowing to 2.4% in 2025, down from 2.9% in 2024, and that's a 0.4 percentage point downgrade from our January forecast. Both this year and next year, growth is expected to remain well below the pre-pandemic average of 3.2%. And this subdued economic outlook poses additional challenges for sustainable development progress, which is already lagging in many countries. Vulnerable and low-income countries are particularly affected, struggling to achieve the strong and inclusive growth needed to reduce poverty and improve livelihoods. The recent progress in easing trade tensions, including last weekend's temporary agreement between the US and China, is a step forward. However, as Shantanu mentioned, our estimates are that the US effective tariff rate remains high at about 14%, 6 times the level at the beginning of the year. And it's also unclear how all the bilateral negotiations will unfold. Overall, we have therefore project that global trade growth will slow sharply to 1.6% in 2025. That's about half of the rate recorded last year. We saw that US imports from China and also from other countries were front-loaded due to the tariff uncertainty. And while we expect more of this front-loading to occur now, given the temporary agreement, this effect is expected to fade over time. The chart here also shows that the persistent challenges in the euro area, the world's third largest economy, where both imports and exports remain weak. It's important to note that beyond the immediate impacts, the new developments could accelerate several structural shifts in global trade, including the rising importance of services, changes in the structure of supply chains, the adoption of advanced technologies, and also a gradual shift toward a more multipolar global economy. It is clear that we are entering a period of transition here, which will bring both challenges and opportunities for the world economy. The trade conflict is also having a notable impact on inflation dynamics. Our report includes a section exploring the challenges of managing inflation during periods of elevated economic uncertainty. In most countries, inflation has continued to decline, but the pace of easing has slowed. In our baseline scenario, global headline inflation is projected to ease from 4% in 2024 to 3.6% in 2025, which is 0.2 percentage points higher than our January forecast. As shown in the figure, average inflation rates in both developed and developing countries are still elevated compared to pre-pandemic levels. Food inflation especially remains a critical issue in developing regions such as Africa and Western Asia, and this is reflecting exchange rate volatility, ongoing conflicts, and climate-related shocks. Alarmingly, the number of countries experiencing annual food inflation above 20% has tripled from 6 to 18 between 2018 and 2024. When we look ahead, the falling prices of oil and other commodities we have recently seen are expected to reduce inflationary pressures. However, higher tariffs, especially in the US, could push consumer prices up, potentially resulting in higher inflation. Over the medium term, we expect that inflation risks persist due to supply chain disruptions arising from trade tensions or conflicts, and also the ongoing effects of climate change. Let's now turn to the regional picture. Compared to our WESP 2025 forecasts, we have revised growth projections downward for nearly all regions and country groups. These adjustments reflect both the direct and indirect effects of the ongoing trade tensions and country-specific challenges, such as worsening conflicts or policy tightening in some regions. We have moderately lowered growth rates by 0.3 percentage points for the major developed economies. In the US, growth is now projected to reach 1.6% in 2025, well below last year's 2.8% pace, as policy uncertainty and higher tariffs weigh on investment and consumption. In the European Union, growth is forecast to stay at 1%, with reduced net exports offsetting an uptick in consumer demand. Manufacturing-heavy economies with strong ties to the US face the greatest challenges. And while the Japanese economy has improved over the past year, we have downgraded the pace of recovery to 0.7% in 2025 due to weakening external demand and monetary tightening. Among developing economies, we are seeing a diverse picture, both in terms of overall growth prospects and the scale of downward revisions compared to January. In Africa, the outlook has been downgraded only slightly, but overall growth is expected to remain only modest. Uncertainties are large due to trade tensions, lower commodity prices, ongoing conflicts, and fiscal pressures. In East Asia, trade tensions are having a significant impact, particularly on economies with strong trade ties to the US. In China, the new stimulus measures and the temporary easing of US tariffs are expected to limit the slowdown, with growth now projected at 4.6% in 2025. In South Asia, support will come from resilient domestic demand and monetary easing, but policy uncertainty and fiscal challenges are weighing on growth. India remains one of the fastest growing large economies, driven by strong private consumption and public investment, even as growth projections have been lowered to 6.3% in 2025. In Latin America and the Caribbean, we see external and domestic headwinds, with diverging trends among the largest economies. While we project a significant slowdown in Brazil and hardly any growth in Mexico, Argentina is expected to rebound strongly as macroeconomic conditions improve. And in Western Asia, growth is forecast to slightly accelerate in 2025 compared to last year, supported by increased oil production. However, lower oil prices and policy tightening in Turkey will weigh on growth. Finally, in the least developed countries, the combination of trade tensions, policy uncertainty, and reduced development aid is creating additional challenges and macroeconomic headwinds. Average growth is projected at 4.1% in 2025, far below the pre-pandemic pace of 5.5% and well short of the 7% target under the Sustainable Development Goals. Turning to the policy front, the global shift towards monetary easing continued in early 2025, and this is likely to persist as central banks aim to support their economies amid weakening demand. In most countries, policy rates remain well above pre-pandemic levels, and that leaves room for further cuts. In many developing countries, lower inflation and more stable currencies have opened the door for monetary easing. Going forward, we foresee significant challenges, however, for central banks and policymakers around the world, particularly for the US Fed. Monetary policy decisions will need to be made in an environment of high economic and trade policy uncertainty, with the time lags between the actions and their impacts adding further complications. In the US, tariff-induced inflation pressures could complicate the Fed's ability to cut rates further. These challenges may result in global spillovers, affecting financial markets and constraining policy space for developing countries. On the fiscal side, we see increased risks for many developing countries as they may face lower export revenues, reduced foreign currency earnings, and potentially also tighter financial conditions. Fiscal space is severely constrained, with interest payments consuming an increasing share of government revenues. And this leaves many countries with very limited capacity to support growth and invest in development. Meanwhile, the shift towards unilateral trade policies threatens to further weaken the multilateral trading system, increasing the risk that small and vulnerable countries are marginalized. In such a challenging environment, we see an urgent need for a renewed global framework for financing development, a central focus of the upcoming 4th International Conference on Financing for Development in Sevilla next month. Thank you for your attention, and I want to encourage everyone to read the full World Economic Situation and Prospects mid-year 25 update, which is now online.
Thank you very much.